Honeywell. I mean, you've seen the name everywhere, right? On your thermostat, on airplane parts. It's been a symbol of American industrial might for, well, forever. A true conglomerate. But here's the crazy part. What if I told you this giant is deliberately choosing to break itself apart? Yep, that's the big bet we're going to unpack today.
I know, it sounds kind of backward, right? I mean, most companies in that position are all about getting bigger, acquiring more stuff. But Honeywell, they're betting their future lies in getting smaller and way more focused. So let's jump in and look at what they're actually planning, straight from the source.
So, what exactly is the master plan here? Well, this isn't just about shuffling a few departments around. Nope. Honeywell is actually splitting into 3 totally distinct, super specialized companies. And the goal for each one? To completely dominate its own industry.
Okay, so here's the core of it. The Honeywell we all know is spinning off 2 of its major divisions. What's left? 3 separate, publicly traded companies. And the whole idea behind this is actually pretty simple. Focus unlocks value. That's the mantra.
And you know what? They are not wasting any time with this. The whole process kicked off back in 2024. The advanced materials business, which they're calling Solstice now, that's spinning off as we speak. And then the big one, the aerospace division, is next up in 2026. So yeah, this is a very deliberate, multi-year transformation. Now usually when you hear about a breakup this big, you think, uh-oh, the company must be in trouble. But here's the big twist. Honeywell is doing this from a position of incredible strength. And if you want proof, just look at their latest quarterly results.
I mean, they didn't just meet their goals for the quarter, they absolutely smashed them. In Q3 of 2025, they just blew right past their own best-case scenario for both sales and earnings. And it's that kind of financial firepower that gives a company the confidence, the runway, really, to pull off a move this huge.
Let's take organic sales, for instance. A solid 6% growth. What does that tell you? It tells you that demand for their stuff is strong and their operations are just humming along. And that's way, way better than even they predicted.
And then you look at profitability. Wow. Adjusted earnings per share came in at $2.82. Now, to put that in perspective, that's a full 22 cents higher than the very top end of what they thought was possible. The company is just firing on all cylinders.
Just look at this table for a second. The gap between what they forecast and what actually happened, it's huge. They were hoping for maybe 2 to 4% sales growth. They delivered 6. They were aiming for $2.60 in earnings per share, and that was the high end. They hit $2.82. So you see, this isn't just a good quarter. This is the solid financial ground they're standing on to launch this whole new strategy.
And the good news just keeps on coming. I mean, future orders are up a massive 22% year over year. They have a record backlog, that's confirmed work, mind you, of over $39 billion. They're so flush with cash, they just handed almost $1 billion of it back to shareholders. This is, without a doubt, a company operating at the absolute top of its game.
Okay, so we've established they have the strength to pull this off. No question there. But what's the future actually going to look like? What is this new Honeywell? And what happens to the 2 big pieces they're spinning off?
All right, so the company that keeps the Honeywell name, well, it's betting everything on one of these single biggest trends shaping our world right now, automation. The goal is to become the undisputed go-to leader, what you'd call a pure-play powerhouse in this massive, high-growth market.
This new, leaner Honeywell is going to have 3 core pillars. First, you've got building automation. That's all about making our offices and homes smarter. Then there's process automation, which will tackle the big, heavy industries like energy. And finally, industrial automation, powering everything from warehouses to factories. You can see how it's a much cleaner, much more focused mission, right?
But you know, this whole thing is about so much more than just a new org chart. It's really a 2-part strategy. On one hand, they're shedding all the baggage from the past. And on the other, they're placing these huge, ambitious bets on the technology of the future.
Yeah, think of it like a balancing act. On one side of the scale, they're basically cleaning house, getting rid of all these old, costly liabilities, things like asbestos and environmental issues from decades ago. And then on the other side of the scale, they're taking all that freed up capital and just pouring it into bleeding-edge technology.
And a massive piece of that future bet is a company called Quantinuum. Now, this is one of the world's leading quantum computing companies. And to put it simply, we're talking about technology that could solve problems that are, well, they're literally impossible for even the best supercomputers we have today.
And when I say they're betting on it, I mean they are going all in.
Quantinuum just raised over $600 million in a new funding round. They brought in huge partners like NVIDIA. And get this, its pre-money valuation is now $10 billion. This is not a side project. This is a massive strategic bet on what could be the next great tech revolution.
At the exact same time, they're sweeping out all those old risks. By offloading these long-term liabilities tied to things like asbestos and old environmental agreements, they're really cleaning up their balance sheet. And here's why that is so important. Every single dollar that's not tied up dealing with the past is a dollar they can pour into the future, into those big growth engines like Quantinuum. So, with all this change happening, what does the immediate path forward look like? Well, Honeywell's updated outlook for the rest of the year, it actually tells us a lot about just how confident they are feeling. And this, right here, might be the ultimate sign of their confidence. I mean, think about it for a second. They are about to get rid of an entire business division. Logically, their total sales should go down, right? And yet, Honeywell is raising its forecast for full-year profits. That's a bold move.
Yep, they've bumped their organic growth forecast up to around 6%, and they've raised their earnings guidance too. The message they're sending is crystal clear. The core business that's left over is so strong and so profitable, it can more than make up for the division they're spinning off. It's pretty incredible. The company's chairman and CEO, Vimal Kapur, really sums it up perfectly. He says the momentum is strong, and they truly believe this new, leaner structure is the absolute best way to create value as they move forward.
So when you boil it all down, Honeywell is making a massive bet. They're betting that in today's economy, being focused and specialized is way more powerful than being big and sprawling. But the billion-dollar question is still out there. Will this giant's deconstruction actually create 3 even more powerful giants in its place? For investors, employees, and all the industries they serve, only time is going to tell.